This is Oracle on the monthly chart, and you can see for the month of March that's ending, uh, it was good month for the bag holders as price is contending with all-time highs. One can say this is a triple top. However, if you look at the weekly chart, you can see how the moving averages were leveling off. And if you look closely, you can see we had a bullish crossover. So the blue is the 13 and the orange is the 26 simple weekly moving average. Now you can see some rejection wicks. Some might call this an island reversal candle. Some may call this an inverted hammer candle. Needless to say, this is bearish. Now before we continue with the analysis, let's look at the most recent news. So old enterprise software provider Oracle isn't a growth stock anymore. Ever since the dot-com era bust, the company has been downright pedestrian. These days, Oracle has been layering cloud infrastructure into its product suite, made famous in the autumn of 2022 with a first-of-its-kind deal with NVIDIA for AI training hardware. So, got to give it to Oracle. They were around since the 2000 dot-com bust and still remain somewhat relevant. Follow-up deal in spring of 2023 was struck for OCI, first access to NVIDIA's DXG Cloud AI training service. Now, the CEO of Oracle explained on the latest earnings call that the company's big bets on AI infrastructure continue to haul in lots of new customers. Due to some hardware supply constraints, growth was throttled a bit. Nevertheless, OCI infrastructure as a service is which AI training hardware housed in a remote data center is rented by customers. That grew 49% year over year to 1.8 billion last quarter. On an annualized basis, OCI sales topped 20 billion. That still puts Oracle far behind its larger cloud peers such as Amazon and Microsoft and Alphabet's Google Cloud. But OCI's infrastructure segment is particularly clearly landing big wins thanks to the partnership with NVIDIA. Now, what Oracle lacks in high growth rates, it makes up for in fantastic earnings performance. Earnings per share grew 16% year over year last quarter as Oracle unlocks higher profit margins from its newer businesses, squeezes synergies from Big Cerner purchase, and returns excess cash to shareholders via a stock repurchase program. Now, Oracle trades at 34 times trailing 12-month earnings per share, or just under 30 times free cash flow, as it continues to scoop up business in this new era of AI and crank out even faster profit growth. Investors should at least keep this one on their radar. Now, I honestly can say that Oracle has not been on my radar. Again, they still remain relevant. You can see how price did it close below. Yeah, we had a close below this weekly buyer's level, but as you can see, the bottom was at $100, round hole psychological number. Now, what we really want to know is what is price going to do at all-time highs? This extended range green candle has to be on earnings, and so you could potentially have some profit taking. Let's go down to the daily chart, and rightfully so, that was on earnings on March 11th. These were the other two peaks in each time price sold off. This was on our earnings, and so here's what we want to look for. I'm going to move this to the bottom of that candle, and this is the top of that candle. So within 123 and 139, about a $9 with prices sideways. You start getting candle closes below 123 and look for price to move lower. Not necessarily filling the gap, as you do have these moving averages pointing up, and that's going to serve as dynamic support. If you eventually get a breakout to the upside, well then 150 becomes your next target. But right now there's no setup. Look for other opportunities. But as the article mentioned, you may want to keep Oracle on your radar. Thanks for watching. Subscribe. Please like the video.